Hello and welcome to Nivesh Kar Befikar, a joint series of PolicyBazaar and the MoneyMile. Joining me today is perhaps the one person who understands the insurance sector like nobody else does. Someone I've known for many, many years, Amitabh Chaudhry, the Managing Director at HDFC Life. Thank you very much, Amitabh, for talking to us. I think there's so much to talk about, and I think the first thing I want to understand from you is that are the young people, the millennials as we call them, thinking very differently about insurance? Because I know we've spent a large number of years trying to convince people how insurance is as important, if not more, than actually just investing and building wealth. Is there a change? Are you seeing a shift?
No, I do completely agree with you that there is a distinct and a clear change which is visible now. We have always thought that the millennials are obviously more financially aware than the previous generations. They are obviously financially smarter. But we also thought that they were fickle-minded and they were very focused on here and now. And insurance is a product which might not fit into their overall scheme of things because it is not here and now. It is about investing and saving for the long term or planning your long-term financial goals. But I think I'm seeing a clear trend where the young aspirants or the millennials, as you call them, are worried about how do they take care of their long-term requirements. Please understand that with this rapid pace at which the world is moving, they're also realizing that we are acquiring some of these lifestyle diseases much faster than what we have done before. They are seeing some of their friends suffer unexpectedly. And I think that because, with all the social media and everything and how people are so well connected now, I think you get to know about people suffering or going through I would say a life kind of event very, very quickly, and it does hit you. So I think very clearly I'm seeing a trend where the millennials are really planning for the long term. It's a trend which has just started. I think it has to take off to a completely to a different orbit for it to become really large and big. But that trend is quite visible. So frankly, if you look at the number of people who are buying, and we are a very large player in the online space, a lot of young people are actually buying the products. Most of the people are actually
What's the kind of age group?
Below 35 years.
Below 35.
Which you would not expect.
Right.
You would expect slightly older people to be thinking about their goals because when they start thinking of retirement. But actually it's the young people who are coming and buying the term insurance. Now obviously they want it here and now. So the experience they want in terms of the whole buying process or what they go through, they want it to be extremely efficient, and they want it to be single click, and that requires a lot of hard work. So the expectations are also very high. But they are there looking for these products and actually buying them, which is obviously great for this country because we all know that India is underprotected, and it is underprotected by a huge margin. And what also has been seen when you frankly look at a country like China, that when a country reaches a certain GDP per capita, then actually the protection levels tend to take off. This is what we have seen in China in a big way. So when you look at the share of protection business in the overall premium income generated by the life insurance industry, it's abysmally low. And it can go to 4 to 5 times where it is.
What is it right now?
So
I know
it
we've
is
talked
less
about
than
less than 5% when we first spoke. Has it gone up?
No, I don't think it has gone up. Now, for us it has gone up. We are now close to 25%.
No, I'm talking about the country.
I think it's below 5% even now. So, to be fair, you have to understand and recognize that the insurance industry has been growing quite rapidly over the last 4 years, and so has the population. So, even if the percentage remains the same, that means you're covering more people. So that's good, and you're covering new people because what is getting captured in the 4 to 5% is a new business. If I bought a policy last year, I'm paying a regular premium. I'm not getting captured in that 4 or 5%. So new people are coming in, and they're coming to the extent of 4 or 5% every year in a growing environment. So that is good news. But it can become much bigger, should become much bigger. And I think when we hit that GDP per capita, I've heard numbers anywhere from $3,000 per capita to $10,000 per capita. I don't know in India when it will be applicable. But what is very obvious is we are underprotected. And when that hits, and when you hit that number, I think the protection numbers will take off exponentially.